Asia is largely lower right now. Hong Kong is actually the only market which is managing to trade in the green.
It is a rare instance where a large bank has actually seen improvement in its net interest margins.
But the problem really is in the operational performance where they are struggling.
Overall, the global industry dynamics are still not recovered.
A weak opening, 95 points lower. The sensex is down 320 points.
It is a good correction, I would say. Let's look at the positives first. The negative, of course, is the market's down.
We've done well so far. We've doubled since we listed.
18,861. There's absolutely no one to pick up. 872 points down on the mid-cap index.
There are lots of blocks being offered in the broader markets.
There were promises made of making profits with near certainty.
There has been some amount of semblance or some amount of recovery which has taken place from the day's lows.
You're with us here on a fresh new edition of Closing Bell. That was the last sort of a few hours of trade wrapped up, and it's been down and out once again. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. This is Closing Bell. We are starting a little early because markets are down once again and down sharply. I'm Prashant. With me, my colleagues Reema and Surabhi. Guys, hi. Good afternoon. And no respite, right? No recovery, no respite. And the pace of the fall is very, very sharp. And I think that is what stands out. Nigel, of course, is joining us from the newsroom floor as well. Nigel, hi, good afternoon. So, yeah, I mean, things are, looking a little tricky out there. They have looked a little tricky. And now, with 6 days of fall that we've had, the Nifty's lost a neat 1,000 points, So, it's not happened in a while. And we are exactly at that 1,000-point cut mark now with, if you take the Nifty from the highs of the 17th of this month. So very quickly this fall has happened. The Bank Nifty will come up on your screen and, we'll put out lots of data here over the next hour and a half or so. But there you go, the Bank Nifty. Actually, the large cap indices are the ones which have not really recovered that much. The mid cap index will come up. That has seen some recovery, but the maximum recovery has come through in the small cap index. So I think that index is still down, but it is picked up quite a bit from the day's lowest point. There you go. That's what I'm talking about. And, yesterday as well, the small cap index actually by close was the strongest of the four indices. It lost just about 0.25%. And I've been saying for some time that has been one of the strongest indices, not just here in India, but actually, around the world. Very few indices, irrespective of what was thrown at that particular part of the market, the small cap market, it kind of just completely marched on. Although now in this correction, in this fall, the small cap index has lost some, I think 6.5–7% from its peak. For the mid and small cap part of the market, the peak coincided with the start of this fall, whereas for the Nifty and the Bank Nifty, we're taking a 6-day period to kind of tell you the 1,000-point fall, but the fall, of course, began earlier than that. So that's a quick bit as far as the indices are concerned. But as I said, there is a fair bit to discuss here. Reema.
Just to, on a lighter note, there is a bit of a recovery in the mid-cap, index.
Why lighter? Very serious note.
Very serious note, sorry. On a very serious note.
Less gloomy note.
Less gloomy note. I was trying to think of a word and I couldn't. It's about a 200-point recovery on the mid-cap index. And even yesterday or day before, we had a similar sharp fall, right, in the mid-cap universe. But the advanced decline ratio was not as bad. I mean, it was much worse in the prior to trading session. So today, the advanced decline ratio is 1:3. But I remember in Monday's trading session, or even in Fridays or yesterday, the advanced decline ratio was much, much worse, 1:7, 1:10 on a couple of days. And even now, as you look at these two lines, they are trying to diminish the gap between the two.
Well, yes, and let's see when the buyers really return to the mid-cap market. By the way, for the week so far, only 3 trading sessions. Today is the 4th one. We still have, a fair amount of time left, an hour and a half left. 5% gone from the mid-cap index, a little over 5%, about 5% gone from the small-cap index, and about 3.5% gone from the Nifty. That's, the severity of the fall. It's been a crunching blow, really, in just the last 3 sessions. I must add that the global picture is still pretty wobbly. Asian markets have, of course, they took on from where Wall Street left. So it was a very negative close for most of Asia, anywhere between 1 to 2% lower. Europe is singing the same song right now. A lot of the markets are down between 0.7%, about 1%. But more importantly, let's see if US starts to recover tonight. And futures have been really weak. Despite the big fall that we saw yesterday, 2.5% fall on the Nasdaq. Even now, the Nasdaq futures are down about 1%. So when does the recovery start? That's the question. And for us, of course, with the mid-cap market, a lot of this sort of, exuberance and euphoria coming off, the picture only continues. Rima, I'll add one more positive point, since you're trying to sort of cut out all the gloom. We missed you in trading hour in the morning. That time, there was only one Nifty stock that was positive, only Axis Bank. Now, at least one or two other names. ITC, for instance, is a bit of a pullback attempt. And actually, some of the IT stocks, they've been trying to fight back really hard from the lows of the morning. HCL Tech has managed to break into positive territory. So let's see what plays out. But Nigel, no two ways about it. I mean, you have to say it as it is, and it's been weak.
Well, that's right. No two ways about it. The bears are feeling on top. But how will the last 90 minutes of this particular series pan out? Well, we have with us our experts. Kush Bora is joining in, and Shivangi Sarda as well is joining us on the show. Hi, Kush, and hi, Shivangi. Shivangi, you go first. We have 90 minutes in this series to go. Last 4-5 sessions, as my co-anchors were mentioning, we've seen a cut of nearly 950 points approximately. How would you trade the index from here on? Do you think there is a possibility that since we've defended at least that 18,800 mark, do you see a short covering bounce in the final hour? Or do you think the last 90 minutes goes down and in fact we go on to test lower levels? So give us your call first on the Nifty and the Nifty Bank.
Good afternoon, Nigel. Thank you for having me. So we've seen that index has corrected nearly more than 1,000 points in the last 6 sessions, and selling pressure can be seen intact at any small bounce. We've seen that the monthly VWAP is near 19,600, weekly is 19,300, and the daily is 18,900. Below which we are trading right now, and call writers are heavy along with the post-put unwinding that we've seen in all the strikes. So heavy selling can be seen, and index has been making lower highs, lower lows, and hovering near 18,888 right now, which was the high recently in December 2022. So this will act as a crucial level to watch out for. Overall structure is under pressure, and market is not giving any signs of relief right now. If we talk about the technical and data setup. So this decline may continue towards 18,750 and then 18,500 for the next weekly point of view, but 18,750 is on the cards for today's point of view. India VIX, which was moving in a very small range in the last 10 days, has now surged in the last 2 days, which is nearly about up by 15% and it touched 12.7 as well today, which signifies that the panic has just begun. Advanced decline ratio also suggests that bleeding has been there, and the people have started panicking after the insane rally that we've seen. So for expiry point of view, 18,750 would be a key level to watch out for. Hurdles are shifting lower to 19,000 levels. Now, talking about Bank Nifty, we've seen that this index has been under pressure in the entire series and is now underperforming. So in this, we've seen that the heavyweights as well as the private have not, performed, and the heavyweights have, given a breakdown as well. So we are expecting a little more downside over here as well. 42,000 for today's point of view, and then 41,500 for the next weekly expiry.
Okay, so you see the markets headed lower. 18,750 is on the cards for the Nifty. That's about 100 points lower from here. Kush, any Nifty trade? We've had 6 days of losses. So at these levels, can someone go short? What would the advice be?
Hi, guys. First up, a very good afternoon, and thank you for having me on the show. Well, Rima, short is not a trade from here on, is it? I mean, the risk-reward ratio just doesn't, favor you. Because if you look at the 200-day moving average, it's close to 18,650. I know that is 200 points away, but on the upside, the first major resistance would come in at about 150, 200 levels, which is, about 350 to 400 points from, the current levels. So I think a short trade is not one that you could play. The only two options are either stay out or play for a technical bounce. Now, I know we've all been talking about a technical bounce because the PCR and the RSIs have all been indicating an oversold market. And, I think that will play out. I think that will play out either tomorrow or in the coming week. The reason it's not played out so far is because if you look at the call writing, it has been massive. I write from 19,200 to 19,000 and now 18,800. Every time the Nifty's actually slipped about 50, 100 points, the call writers have been super aggressive. and that is not letting the index sort of go up from here. But once this expiry hangover is over, and this is the monthly expiry, so it's a big one, right? So once this monthly expiry hangover is over, I think we should see a bounce. I'm not saying we're out of the woods yet. Even a 300-400 point rally, 300-400 point rally from here, Nifty 19-200 would still perhaps not be a very convincing change of the trend. But as I said, short is not a trade that you play from here. Just to put things in perspective, the last time around, the Nifty RSI was close to 27, which it is currently. Nifty bounced from 15,500 levels to 18,000 in the next couple of months. Bank Nifty bounced from 35,000 levels to 39,500. I'm saying we're close to the bottom. The only trade that you could perhaps play from here is a long one or sit out. Short is not something that you want to play at these levels.
Okay, all right, got that. Kush, thanks very much. Shivangi, if I could just ask you, as you look at the market right now and as we go through this expiry, what would the immediate recommendation be, say, for positions around, banks? That's one big pocket, and also IT, which has seen several rough days now, given that this was the earnings phase.
Entire market has corrected, and we've seen that these some of the stocks have been resilient, but then again they have faced a lot of pain as well. And in this downfall, we are looking for some tailwinds and some favorable mix, and this is actually a good point to accumulate and start adding the stocks. One third stock on my radar from the banking space, as you mentioned, is ICICI Bank. We've seen that, this stock has, kind of given a little bit of a pain on the weekly frame. But now, for the next series perspective, this stock could, see a reversal from here at these zones. So we are looking at this stock for a reversal. And for the targets per se, 940 would be an important level over here, which we are expecting next. 888 would be an important support to watch out for here. Now, talking about IT stocks, we've seen that Persistent System is one such stock which is quite resilient despite the market volatility and weakness. So this is one stock from this space which is on radar. This stock has, sort of formed a pole and flag pattern on the weekly frame and is, holding on to its range on the weekly frame as well. So also respecting its 50 exponential moving average on daily frame. So this is stock is looking quite positive, and one could watch out for 6,040 levels over here with a support near 5,700 levels.
Guys, hi, good afternoon. Shivangi, just a couple of names, right? I mean, in technicals, they say you buy strength and sell weakness. So let's look for strength. And there aren't many, but there are a few. So if you have views on any of these, you want to pick up, your choice, BSE, right? While the market came off over the last 6 days, BSE in that same period is up some 20%. It's up today as well. It's staged a full recovery. Angel One is up 11% over the last 6 days. So it's actually gone the other way. Credit Access is up 9%. Med Plus is up 7%. So I'll just repeat that: BSE, Angel One, Credit Access, Med Plus. If you've looked at any of them or you want to comment. Shivangi, go on.
From, all of the basket that you mentioned, BSE is one exceptional stock which is looking quite positive. And we've seen a rally in the last 6 months. The supports are only shifting higher, and, the volumes that are being added along with, the delivery volumes as we head towards the monthly expiry is quite exceptional over here. So this is one stock on my radar from, the entire stocks that you mentioned. And we could utilize any small declines for buying opportunity over here. The entire sector tailwind is also working so well in this stock. We could look out for, 1870 and then 1900 levels for this stock.
Okay, all right, Shivangi, thanks so much for joining in fact, giving us, those views on a whole host of stocks that we just discussed. For the time being, though, we'll slip into a short break. You come back and we'll get a global voice to talk about the bond yields and fixed income on the other side. Later on the show, we'll also be joined by some of our market experts. Stay with us.
Okay, welcome back. So we've got the market, which is still under pressure. We're down about 260 points. 18,862 is where we stand at right now. We have Nicolo Bocin. He's Group Global Head of Fixed Income at Azumat Group. Nicolo, thanks for joining us. I hope I got the pronunciations right. Feel free to correct me if I did not. But, we want to talk about... thank you. We want to just talk about the big dominating driver for global markets, which has been, yields pushing higher. These are really large swings on for example, the US 10-year. Hit 5% earlier this Monday, fell to about 4.8, almost back to 5. Tell us, for that market, what really, what's the big driver from here? And do you think we've got a lot more to go from here? Or we are near the peak? What's your sense?
Well, I like always looking at what we had before. We are coming from zero. So before 2022, these values were very, very low, extremely low in a low inflation and low growth environment. Then last year, we went through an inflation shock, not a normal bump in inflation. So it was a proper shock, and now is reabsorbing. In that shock, central banks, which were late probably before in adjusting rates, had to rush and hiking at a very fast pace. That's why we have seen the effect on rates last year being amazing and this year continuing. But last year, the most of the adjustment happened on the short end of the curve, reflecting higher rates by central banks. This year, you are seeing an adjustment on the long end of the curve to reflect higher risk premium, which was completely missing from the scene, and now is finally back. So I have the feeling that we are close to the peaking rates, but I want to see further reabsorption of liquidity from central banks, which is the last piece of the puzzle which is missing. We still have tons of liquidity out there. So if I look at the past, we had adjustment in rates from 0 to 5.5 in US, from 0 to 4.5 in Europe. But from a macro point of view, nothing really happened. From a growth point of view, nothing really happened. And that's because of the huge amount of liquidity still in the market. Where central banks are withdrawing liquidity step by step, and the path for liquidity withdrawal is still long. So I still see some adjustment on the long end of the curve, simply to reflect a little higher risk premium than the one we have today.
Nicolo, hi. Good afternoon, and thank you for joining us. Last time we saw such high interest rates in the US back in 2007, what followed was a global financial meltdown. Of course, that was not only caused by high rates. There was a subprime crisis. There was a real estate problem in the US. What now? I mean, if rates stay higher for longer, as has been the narrative and the expectation, then what concerns could we be possibly looking at?
Well, the imbalances we had at that point in time were completely different, and we didn't have so much liquidity. That's the big difference. Now we have trillions of liquidity in the market created by central banks to support macroeconomic dynamics in the past few years, or to face the huge COVID crisis. So I don't see anything like 2008, 2009 happening, even because the capitalization of banks globally is uncomparable to what we had at those times. So I don't see anything meaningful happening, actually. We had a major adjustment in rates. I believe that we will have higher for longer rates because the growth dynamics are not bad at all, and because inflation will be a little higher than we were used to be for quite a longer period of time. So there are some major changes ongoing at a global level. We have a deglobalization, we have an extremely strong job market, and we have energy transition. So these elements will sustain inflation and will avoid inflation falling back to 0 or 1% for quite a long time. But in the meanwhile, you have other ongoing forces, which were the forces that brought 30 years of secular stagnation, which is aging population, rising debt, and technology, and that's still persistent. So I still see these couple of years and one more year from now as an adjustment driven by COVID. And I see that, all of us going back to the world we had before COVID in 1 year from now, because technology is doing more steps now. Artificial intelligence, ChatGPT are all deflationary elements. So we have forces now acting on inflation, acting on growth. We need to find some stability, but most of the move on rates happened, and I don't see anything dramatic like 2008, 2009 happening, actually.
Okay, fair point. So, yeah, absolutely no comparisons. I was just trying to ask if there's any hidden risk there beyond the 5% headline. But I think the point that you're driving is that there's no real reason to worry about the bond market. There's ample liquidity, and 5% is a great rate perhaps to come and invest in. So the bond market just, continues to hop along?
Focus must be on liquidity only. We went from 0 to 5.5 and nothing happened. If we go to from 5.5 to 6, nothing will happen. The same. The fact is how much liquidity we have out there, how big is the central bank's balance sheet. They are withdrawing liquidity, but very slowly, step by step. They don't want to kill inflation, basically, because you need higher than before inflation in order to make that huge debt pie sustainable in the future.
Okay. All right, Niccolo, we will leave it on that note. Thank you very much for joining in and giving us some perspective. Niccolo there, who's tracking global bond markets very carefully, saying that this is fine. I mean, markets will learn to live with it. No problems. Prashant, I was just hearing him. He says, they went from 0 to 5%. Markets are fine. 5 may go to 6. So 6% is what US Treasuries are yielding. 6% is what the Nifty has yielded in the last 1 year. I wouldn't say more. It's just the high returns that you're getting in the US Treasury markets. I think that may make people think.
Yeah, I hope not too much. The point is, in 2007, in that phase, 2006 to 2008, interest rates moved up about 450 basis points, which is pretty similar. I think with this time, it's up 450, 475 basis points from that level, from the absolutely low levels of 0.25% to where we are now. And of course, we got a big accident back then, because rates went up, right? The situation this time is very different, but can it be without any consequence? I think that is the only debate. There will be some consequence. Many believe it'll be a recession, it'll be a mild recession, etc. But, markets have been trying to preempt this for some time.
Maybe not financial market consequences like what we saw in 2007, but maybe real economy consequences this time around.
I mean,
we don't know.
We'll find out. But, as we know that the Nifty is turned around from that 20,000 levels, which we were there not very far away, not very long back, to the sub 19,000 kind of levels now. Nigel is actually standing by the big wall to detail what stocks have led the fall from the highs. Nigel, over to you.
Well, that's right. Not too long ago, we were celebrating the 20,000 odd mark. Mid-September is when we went to the 20,000 odd mark. And on 18 September, the last time we closed at around 20,000 odd. So I'm just tracking the fall from around 20,000 to sub this 19,000 odd level. In terms of market capitalization, that's been lost. The BSE listed entities, 18 lakh crore of market capitalization has been lost since the 18th of September itself. What's been weighing? Well, global equities itself have moved into a bit of a dizzy. One factor being these geopolitical concerns have come back on the table with regard to the unfortunate conflict that we're seeing in Israel. And that's a threat to oil prices, which have spiked up. The second factor is the Fed talk has become more hawkish. And now the global equities are coming to terms that interest rates could be higher for longer. And both those two factors have been weighing on global equities and the Indian markets as well. So let's take a look at the fall. From September 18th itself, from that close, the Nifty is down. And the problem for the Nifty is both the opening batsmen, so to call it, the pillars of the market, the banking as well as the IT indices, both of them have been underperformers. And yes, we have seen selling in the broader markets. But I'll tell you what, if you look at it in the last month or so, even after this fall that we've seen the last few days, well, they have been relative outperformers. Let's run you through the stocks that have been weighing on the Nifty itself. The Nifty and the IT stocks, the banks and IT stocks, they've been weighing down. So all the top names out there from the Nifty, they have lost anything between 9 to around 14% approximately. But there have been other losers as well, besides the banking as well as the IT names. Divi's Laboratories, you have Adani Enterprises, JSW Steel, Adani Ports, all of them did take a bit of a pullback out there, down between 8 to around 12%. Few winners, Coal India stands out because the scarcity or the underinvestment in coal globally. So that one's up with 8.5% gains. You had Nestle as well as, Bajaj Auto that have eked out some gains as well. But from the broader markets, well, there's been a fair bit of action. And we're not talking about 5, 10, 15% returns. Take a look at some of these stocks. Just from September 18th onwards, even after the bit of a pullback that we've seen from the highs, well, you have BSE, MCX, Kalyan Jewellers and Angel One. They're up more than 25%. We're talking about, just a month or so, and these stocks have done well. Even Suzlon, Prestige Estates, as well as Fact, all of them have seen big returns. So there's been a big party actually in the broader markets, and now we're seeing some bit of pullback in select names. But these definitely, stand out. Stocks that have lost out and not really participated, you have Triveni Turbine, NMBC Steel, Finolex Cables and UCO Bank. We've been making a couple of these points that some of these companies like UCO Bank, Indian Overseas Bank, the float in the market has been very limited. And that's why those stocks ran up. And now, in fact, they're under some pressure. Even a top name, there was a bit of a rejig at Navin Fluorine at the top. And that's why the street is a little bit nervous. JBM Auto as well has seen a big run, but all of them have come in for some profit taking. So from the broader markets, there have been stocks that have been under pressure. But I'll tell you what, on the headline index, that's on the Nifty itself, downside can be protected. Why is that? Because valuation-wise, post this 5% correction, well, we're pretty much trading, at par with what we have seen the last few years. That's with regard to the averages. And the street is still hoping that the Indian markets, the Nifty EPS will compound by around 15 to around 16% on an average for the next 2 fiscals, which will be much better than the rest of the globe. So on that optimistic note, just thought that we'll end it. But otherwise, 20,000, 90,000, it's been a bit of a painful journey just in the last 1 month or so. Back to you.
Thank you, Nigel, for summarizing that. When you look at, the market moves on a tick-by-tick basis, day after day, you forget to put, the last many days into context, the fall from 20,000 to 19,000. Thank you for encapsulating that. What we are seeing right now is a bit of a pullback in a couple of these Adani group names. So Adani Ports and Adani Power, there has been some intraday recovery, some pullback. Pull up those 2 intraday charts. And the other group which is seeing some buying is JSW. So JSW Energy is up more than 6%, while JSW Infra 2 has moved to the high point as it gains close to about 4.5%. We'll get into a break. On the other side, Deven Choksi of DR Choksi FinServe joins in.
Welcome back. Well, I'm trying to look for a couple of positives today, and one such thing is that the advanced decline ratio has improved a little bit. So let's pull the crisscross lines. Remember, at the lows of the day, you had only 200 stocks that were advancing. That number actually has moved up to around 900. So those lines are getting a little closer to each other in comparison to what we saw at the start of trade. And a few stocks that have popped up, Bajaj Hindustan, the stock is up close to around 7% from the day's low. HCC as well has popped up in trade from the day's low. Just talking about some intraday stocks, they've seen a big recovery. You have Vascon as well, that's popped up from the day's low. And also you have Canara Bank. So a select few stocks are moving higher. We had already highlighted a few like BSE. So keep an eye out on the screen. It appears on select stocks there is some buying that's emerging, though the breadth of the market is still in favor of the number of stocks that are declining. But who better to give us an insight into dealing rooms? Nimesh joins us to tell us what's going on today. Well, Nimesh, yesterday, nail on the head, the FIs were big sellers and you said there was likely to be some liquidation. Today, what are you picking up in terms of flows?
Well, see, again, today's flow will not be that important because of the expiry. So it gets skewed because of the expiry as well. So I won't read too much into today's flows. But again, from a flow perspective, the feedback is there are offers in mid caps and small caps. And one of the wealth fund is looking to offload a lot of the broader market stocks. So that was one feedback which I got in the morning. But if you look at today's market, every pullback attempt was got sold into. I guess it's also because of the expiry that, you're seeing that volatility and that's going to play out. But two things, from a flow perspective, while FIs are net sellers, and that could possibly see in the FI number, but today there is buying as well from the domestic mutual funds and insurance companies. So there was a bit of nibbling post 11 a.m. in the broader market. So, and that explains a bit of recovery in the broader market, cash stocks, so to speak. There is some bit of recovery. You highlighted a few names which have recovered from the day's low. So some bit of traction is clearly there, buying traction from domestic mutual funds. That's the feedback. From a technical perspective, for today's closing, 18,850 is a level to watch. If that gets taken on the downside, then I guess people are talking about the 200 EM of 18,600 as a level to watch. So maybe, I guess some of the selling is also because of technical in nature, because some crucial levels got broken this week, and hence we are seeing a bit of extended selling in the broader markets. I guess the other point is, I was just chatting to some domestic mutual funds. On an average, the domestic mutual funds are sitting on 3 to 4% of cash, and that I'm told that maybe will get deployed if market falls further from here. So that domestic support will possibly be there for the next few days if it falls further from here, and that's why you'll see a bit of recovery in the broader markets in some of the good quality, high quality stocks is what the feedback is. I guess again, once the expiry is done with, a pullback is pretty much on the cards. But the key question would be whether it gets sustained, and that will depend too much on the global market. So we need to see how global markets pan out. But from today's perspective, FI continues to sell, but there is equally good amount of buying from domestic mutual funds at lower levels.
Okay, all right, Nimesh. I think we'll let you go. Because when you come back, you'll give us the stocks later on. But we just thought that we'll tell our viewers how we see things panning out, and Nimesh has given us that insight as well. But let's focus on a couple of stocks then. Deven Choksi is with us to help us out with some fundamental analysis. Hi, Deven. Good afternoon. Thanks so much for joining in. Well, let's focus on a couple of big names. Tech Mahindra, that stock is under pressure. The results look quite dismal. What's your view on it? Because the outlook from here on may look better. And also valuation-wise, well, it trades at a bit of a discount in comparison to its larger cap names. Your take?
Nigel, good afternoon. Well, certainly the result is disappointing, far below the expectation. No questions asked on that. Maybe I think we'll have to wait and see what is the confidence that the management is producing in the management commentary. Particularly because I think the situation currently that most of the clients are not releasing the order even though they want to. When they would probably for the first cut, I think our first opportunity to get this particular order released, I think that would be more interesting to want to look into. Because as it stands, as such, I think the third quarter is likely to remain soft. And on the back of the second quarter, if this quarter also remains soft, then possibly I think we are likely to see, a further dampening of the sentiment. As of now, I think we'll have to take one Q at a time. I think probably we'll have to wait and see where exactly I think the company is likely to show the rest of the kind of a fall as far as I think the business outlook is concerned. I think on the numbers. We'll have to wait and see on that aspect.
Okay, by the way, there's an interesting attempted pullback on the mid-cap index. The mid-cap index is off about 400 points from the lows of the session. And quite a few stocks are bouncing around right now. That's the recovery, a small recovery we can sort of look at. Zomato It was hit hard in the morning. It was down about 5%, but now it has cut its loss to just about 1.4%. Let's pull up Zomato. That's a sharp up move that we've seen in the last half an hour or so. Some of the PSU stocks, they are trying to pull up from the lows. SJVN, for instance, Satluj Jal Vidyut Nigam. Then you have IRFC. A couple of these PSU banks are managing some green as well. That's SJVN for you. There you go. It's come into the green. Pull up IOB. Let's look at Central Bank of India. Sharp moves on quite a few of these PSU. Even UCO for that matter. Sharp move on PSU banks from the lows of the session as the fight back continues. And beyond PSUs, probably worth noting Adani Power. There's a bit of a move on that stock as well. About 2.5% up on Adani. A bulk of that buying has happened in the last 1 hour or so. So those are some interesting mid-cap movers. David, hi, good afternoon. What have you made of all the mid-cap drama? I mean, last couple of days have been absolutely brutal for this side of the market. What do you think is going on? What triggered the shakeout? I mean, we always knew about the stock run-up, etc. But what do you think triggered it? And do you think it's close to coming to an end?
Sir, good afternoon. Well, in my understanding, I think most of the traders who probably bought into this particular euphoria of mid-cap and small-cap have probably started experiencing the first level of panic, and as a result of which I think the selling has been accelerated. Some of the cases we also found that people have been leveraged, and that is where probably I think the first level of selling has taken place again because of deleveraging requirement which took place. So it's a combination of few factors wherein you are seeing on one side higher valuations of the mid-cap stocks, which has started giving discomfort to some of the matured investors like mutual funds to buy into the current market, into the portfolio. And on the other side, the traders who bought into on the euphoria, they also had to sell because of the leverage position that they carried along. So all in all put together, I think market is passing through a kind of an adjustment. I don't think that many of the mid-cap companies at this point of time at the valuation at which they are putting are justified, particularly because I think the commensurate growth is not being seen. Some of the companies are putting at a valuation of 40, 50, 60 times, whereas their growth rate is around 15%, 20%. I don't understand how long this kind of irrationality sustains. So that's where probably I think you're likely to see more correction, maybe more time correction along with in the mid and small cap space. Money is also getting shifted into the large cap stocks. That is what we find. Some of the genuine investors are coming into the market, putting in new money in some of the large cap stocks where the valuation have become attractive. So that's a shift that we are currently experiencing at this point of time.
Okay, all right. Devin, just want to highlight a few more stocks. And as we speak, actually, the number of stocks advancing has crossed the 1,000 mark. So let's pull up, the crisscross lines yet again, which was added down to the advancing stocks around 200, 250 earlier today. That's moved to around 1,000. And select stocks have moved up. Case in point being an Angel One. Just take a look at the intraday chart out there. Angel One has spiked to the high point of the day. You have Sonata Software. That's another name that's seen a good spike up in the last few minutes. So just pull that one up. Here, Jindal Saw actually that came out with a set of numbers. So quite a few of these names, they have moved higher. All of them up anything between 2 to around 4%. I'm talking about just this hour moves. But Devin, I want to ask you about the shipbuilders. They seem to be coming back in form. Mazagon Dock, yes, the float is fairly limited out there, but that stock has spiked up. Kochi Shipyard as well has moved up. And Garden Reach, among these three names, do you like any of them? Garden Reach, Mazagon, or even Kochi? All these shipbuilding companies, they are spiking up.
So, Nigel, I think there is no question asked about their order book position, their visibility to execute, etc. I think one is fairly comfortable given the situation in which they are operating. However, I think the valuation-wise, I think things are all said in the price. In my viewpoint, I think at this point of time, maybe I think we'll have to first go for the comfort in form of margin of safety, which is probably missing. Currently, these stock prices are held up because of I think some of the bull traders I think who are basically maintaining their position in the counter. As a result of which I think the stock prices are remaining at a stable level, also due to comparatively lack of liquidity into the marketplace. So I think that is possible, and that's where probably I think we are seeing the higher valuation fully discounted into the price, the growth, everything is continuing at this point of time. To buy into the portfolio, I think the underlying story remains strong. I think we'll have to buy when the market gives a good correction. Till that point of time, we'll have to wait and see.
Devin, have you trimmed your position in any of the mid-cap stocks? Because you did say many of them are trading at expensive valuations. I'm sure your portfolio stocks would have also seen a phenomenal rise in the stock prices. So are you looking to rationalize some of your holdings? And if yes, you want to tell us a little bit more about it?
So for about 2 or 3 months, I think we have been extremely cautious about this kind of a rally which was happening in the market. And as a result of which in our PMSs in our portfolios, we have actually, I think, brought down the positions and booked some profit. And we prefer to stay on cash. On the contrary, I think the money which is right now being deployed are into some of the large cap companies where we feel reasonably more confident about the growth prospects of the companies, the business outlook of the companies. And that's where we believe that I think the profit made out of the small and mid cap companies could possibly find the best route in some of the large caps, given the kind of price correction. So we are comfortably, I think, investing into those large cap companies where we believe that margin of safety is also equally high.
What's the cash on your books? You said you are increasing your cash exposure because you are cautious on the markets. David? Wanted to know what the cash level is in your books now.
Sorry, Rima, I think I missed your voice in between.
Okay, never mind. Looks like there is a bit of an audio problem. Thank you very much for joining in, Devin. We need to slip into a very short break. On the other side, we'll be joined by N. Jayakumar, Group CEO and MD at Prime Securities. Stay tuned.
Okay, welcome back. So just a quick look at the market themselves in terms of what we've done really. The Nifty's, by the way, shed 1,000 points as we've been highlighting in the last 6 sessions or so. But not just the Nifty, right? I mean, look at other indices as well. And in percentage terms, what has lost how much? The Nifty is down about 5%. The Bank Nifty has lost about 5%. Of course, the highs on both the Nifty and the Bank Nifty were not 6 days ago. They were earlier. So from the all-time highs, of course, the fall is a little more. For the mid-cap and small-cap indices, the highs that we saw early on, that is pretty much the high as well. So 7.5% and 7% on the mid and small-cap part of the market, respectively. Let's look at the damage in the broader market, right? Not in terms of individual stocks. Nigel did that earlier. But just statistically. So I looked at the NSE 500 group and what stocks have done in that in the last 6 sessions. So there are only 21 out of these 500 stocks which are actually even higher. We were discussing some of them like BSE and a few others earlier. There are 25 stocks which are down over 15%, and there are 125 stocks. I mean, that's what, 25% of the NSE 500 universe, which is actually lost over 10% or so. So, it's been, in a way, broad-based. Now, I just want to wrap this up with a quick look at where do supports come in at, right? And there are various ways to kind of skin the cat in terms of looking at these levels. But one of the simplest ways is to look at where did the market sort of spend time at earlier. So what was the last congestion zone for the Nifty and all these 4 indices, right? So for some, it's the June to July period, and others, it is actually the August period. So the mid-cap and small-cap indices rallied on through June and July. I mean, actually, if anything, the pace picked up. They halted around August. So here, the mid-cap index support comes in at about 36,874. That's actually some distance away. It's about 8% away. For the small-cap index, the support comes in at about 11,500. That's, again, the August low. We're about 5% away on the small-cap index there. The Nifty Bank and the Nifty. The Nifty, the June-July congestion zone, as we've been pointing out for the last many sessions, is approximately 18,700. Hopefully, I mean, if we go there, that's it. The Nifty Bank, of course, has already broken it. So for the Nifty Bank, you'll have to go, if you want to find supports, you'll have to go much lower in that sense. So, just thought we'll put out some of these levels for reference because these do sort of come in handy. I just want to also take a quick look at, what's happening right now, because as we've been highlighting, a lot of stocks have seen a lot of recovery. So just a few names I want to highlight. So what we're doing is taking a look at the top recovery stocks here. These are all stocks which today, and this is not from some other date, but from today, from the lows today, they've recovered on an average between 7, 10, 12%. So look at this. Jindal Saw, Usha Martin, BSC, Adani Power, you have Apar Industries, SW Solar, Sterling and Wilson, which is actually now up 5% or so. JSW Energy, 6% higher from the lows. I think it's up about 10, 11%. Mazgaon Dock, Cochin Shipyard. And I, by the way, looked at the NSE 500 group of companies, and these are the top sort of 13, 14 names which came up with the maximum recoveries. Godfrey Phillips, you have Sundaram Finance, Medanta, Angel One, Home First. Home First is up about 8% or so from the day's lowest point. So some quality names here. So it kind of gives you an indication, a sense that at lower levels, there is perhaps a little bit of buying which is starting to come in. We need more of that as we go forward. N. Jaykumar is with us, Group CEO and Managing Director at Prime Securities. Jake, it's good to have you with us here. Thank you very much for your time. So just sort of your initial first thoughts. A lot of people were expecting a fall. And I also know that a lot of people had kind of stopped vocalizing and verbalizing their expectation because the market just did not fall. It just kept going higher. But we've got this now. Do you think this is it, or it perhaps has got a little bit more to go? Your sense?
Well, thanks for having me over. I think the fall got created with the excesses in the small and mid-cap space. And as the correction in that set in, I think it just happened to be a bit of a domino effect where, because FIs have been in any case sellers in the market. So we've had, with international cues being particularly unfavorable, a fair amount of overhang of that coming through. And what you've seen in the last 2-3 days is a sort of a cataclysmic, to my mind, I'd like to in fact even call it a bottom. And I think at this level, we may have pretty much played out for the moment. I think the markets not just are oversold in the short term, but I think the fact that money will now come in, but come into large caps is the way I see things moving forward. There's a lot more security and safety in large cap stocks. Some of the big private sector banks, etc., fall into new lows. And therefore, there may be some rotation in terms of, money moving from one bank to the other, money moving from, one large cap to the other. But I think the party for the moment in small and mid caps is certainly over. And if the market were to recover, which I think it will be led by the large stocks. The index movement will be large stock driven, and nothing from a belief or a conviction perspective has shaken my confidence in any manner that this rally is here to continue. The correction has been brutal, and it has essentially left a lot of HNIs, stopped out, and a lot of positions have been busted. Rollovers have been much lower, as you will get to see. And both in terms of international flows, like let's say a large hedge fund having closed down, etc., which we keep hearing, stuff like that adds to the cataclysmic nature of the bottom formation.
All right. Hi, Jakes. Good afternoon. Good to hear your thoughts. And as we speak, Jakes, the small cap index has almost moved into the green after being down close to around 2.5%. So some hope, some kind of bottom fishing appears is taking place. But as you said, it's more safety in large cap names. You briefly mentioned about large banking names that are trading at multi-month lows. What's your view out there? I mean, what would be your pecking order, particularly HDFC Bank? It's not only important from that stock's perspective, but for the index, you have 15% of the index not performing. So your view?
We typically eschew individual stock discussions. But were there to be just one comment, which is, while we do believe that real estate exposures have, in many senses, started performing for most people. But the fact that this merger itself, which people say has been well digested, my own personal feeling is that some of the real estate exposures have tended to put a lid on the growth of this bank. And I think those may be short-term worries that are playing out. The fact it's also owned by every single investor, whether domestic, foreign, local, family office, etc., makes it even more difficult that when some exits happen, then effectively the underperformance of that, being an overowned stock, comes into sharp prominence. And therefore, every exiting shareholder ends up selling this, because it's the one stock that does give you the liquidity to sell out. So I think HDFC is peculiar in the fact that it's been overowned, and that may well be its bane for the moment, which has been its boon in the past. So that's the way I would look at it. But other than that, so I think some money is moving from there into other private sector banks, whether small or big. And that process will continue. This is, but the heavy weightage that an HDFC Bank plus a Reliance command may well be, in some senses, also a cap on the amount the index can move. And the redistribution of the index weight is a process that will keep taking place. That's why new sectors, new rallies into every, new leaders in every rally is the way we need to look at going forward.
Jakes, afternoon. I remember in our last conversation, you were bullish about pharma. Are you as bullish as you were, say, 6 months ago, or do you think a lot of the good news may be in the price now? Banks you're sounding very bullish on banks as well, particularly large cap banks. What else? Can you tell us in this correction, what are the opportunities?
Well, pharma, I'm even more bullish than ever before, because any number of brokerage reports did come out in the interim, talking about how shortages in the US are short-lived, about how generics pricing, which had actually just bottomed out 2 quarters ago, they bottomed out, they have sort of peaked out for the moment, etc. Now, the fact is some of these are structural in nature. We've had a situation where with price impacts being the way they are, there is a move towards genericization, if you will, move towards more generics. And that is not a 1-2 quarter phenomena. I think it's here to stay. It's good for the next, to my mind, 8 to 12 quarters, at least 2 to 3 years. The interview on your channel of the FDA commissioner indicated quite clearly that the dependence on China will get switched to dependence on other markets especially markets like India for production. So my personal belief is that the pharma rally so far has been more a trader's rally. People have seen under ownership convert to some extent to some ownership. But I personally believe that the pharma rally could be in its very, very early stages as yet. And the US generics is the space to start off in terms of focus. So that's a big thesis that will continue. Even if you see in this particular correction, they have corrected the least amongst various stocks that have corrected. And I think they will show strength and could well be, their weightage is small, so it will be difficult to say that they'll lead a rally, but I think there'll be a greater percentage of money movement into this space. And the results for some of the pharma majors over the next next 2 weeks will actually, hopefully should reaffirm the belief that we have. That's one. As far as banks are concerned, we've talked about it. There's one under-owned space that I would like to talk about, which is media. Media in this country is now well consolidated in 2, 3, 4 large groups. It is a business which is as consumer-driven as any other business. It is at the whims and fancies and the price pickiness of customers. And to that extent, it's not very different from FMCG, except it's more consolidated and therefore deserves probably a better price-earning multiple. Today, most of the media spaces, despite being almost zero debt, despite being high on operating income, high EBITDA margins, are quoting at a third to a fourth of FMCG multiples. So from that perspective, I think media, A, being under-owned, B, undervalued, and have all the makings of a sector that can attract and in fact sustainably attract a lot more money than they have attracted recently. And I think all 3, 4 media groups are there for the picking as we sit and watch this space today.
All right, Jakes, can't say we can complain. That's a view that I think sounds quite good to most of us over here. Good having you on the show today. Thank you very much for joining in with that perspective, and we look forward to the next round of conversations as well. All right, with that, back to the screens. And on the Nifty, at least the situation isn't really improving. On mid-caps, we've been talking about this feeble attempted recovery in PSU stocks or railway stocks trying to fly out. But Nifty, no such luck. 18,850.51. That's the mid-cap chart. Now pull up the Nifty chart. There is no sustained trace of buying. Look at the Nifty. It's actually at the lowest point of the day. That's where the problem seems to be. Let's take a break. We'll come back on the other side, get some more trading calls going. And Nimesh is going to be back with us on a couple of buzzing stock points as well. So back with that in just a bit.
Welcome back. Well, the headline index is still under pressure, but select stocks in the broader market, just take a look at the recovery that we're looking at. Elecon as well as Apar. There's been a big recovery. It's more than 10% actually from the day's low. So the intraday charts actually should come up for you. A couple of more names, Gujarat Fluoro, the stock was under big pressure. But in the last 15 to 20 minutes, that stock has seen a big spike up as well. So the intraday charts of some of these stocks should come up. Even India Cements, you remember the stock around 260, 270 odd. That stock did see a sharp correction. But in the last few minutes, that as well has recovered from around the 200 mark, closer to around 210 odd. So with that sort of a backdrop, Nimesh is back with us. He told us what he's picking up in terms of dealing room. But Nimesh, stock-specific action, what are you picking up?
Well, Nigel, as you rightly pointed out, a bit of recovery in the cash stocks. So that's largely the theme of today's market, And within that, the first stock on my list today is Manappuram Finance. Again, this is one stock which has got hammered in the last couple of days. Bit of recovery from the lows in today's trade. And I understand at these levels, some bit of institutional activity is back, interest is back, and some AIF bought as well in today's fall. So that's the first one. The second stock is IGL. We saw some bit of recovery in yesterday's trade, but again today the stock got sold into. And today's selling is largely on back of large sell flows. So expect high delivery volumes and some larger FISMs to be active sellers in IGL. So that's the second one. The third stock is VIP Industries. A little illiquid stock. You don't see much of volumes in that stock. The stock had rallied on hopes of a possible deal, but that hasn't come through yet. And now there is some bit of selling pressure back in VIP Industries. So that's the reason why that stock is under pressure today. And the last stock is RBL Bank. A big cut, almost 10% in 2 days, and sharp volumes as well. And I understand for the last couple of days, leading hedge fund seems to be quite active on the sell side, and that's the reason why that stock is under pressure today.
Okay, thank you very much for that. Kush Bora is here with us for a few BTST calls, or should we call it STBT today? Kush, what do you have for us?
We'll call them BTST, Rima. I still have BTST calls because the market seems to be, attempting a bottom. And as I said, once the expiry hangover is over, we might see a bit of a rebound from here. So two stocks on my radar. First, the big one is, Maruti Suzuki. Again, the stocks corrected, quite a bit along with the markets, but overall the auto sector, has shown a bit of resilience and, might continue or might be the first one to, rebound from here on. Maruti Suzuki is on my radar. 10,750, 11,100 are the targets that I'm looking at. 10,200 to 10,100 is where I would place my stop loss. The next stock that I have is from the defensive space, which is Sparks and Pharma Advanced Research. The stock, showing some strength today as well. It's still, trading in the green, which is a very positive sign. It's actually attempting a bottom near its support zone of 215, 220 zones. So here, we could look at a positive, up move in the coming days. 235 and 250 are the levels that I'm looking at. 210 is where I would place my stop loss. So Maruti Suzuki and Spark are the two stocks on my radar.
Thank you very much for that. But let's talk about the mid-cap, index. We have seen a bit of a recovery. They're off from the session lows, but it's been quite a brutal fall for the mid-cap index over the last few days. Vivek is here with some interesting data. Vivek.
Well, absolutely right. To put into perspective the kind of swift fall that especially the broader end of the markets have seen, we've actually gone ahead and seen three indices that encapsulate, what the mood is like, especially in the broader end of the market. So we've looked at the Nifty 500 index, we've looked at the Nifty Mid-Cap 100 index, as well as the Nifty Small-Cap 100 index. Now, the Nifty 500 index hit its lifetime high on September 12th. Since then, it's corrected more than 7%, but post September 12th, 390 out of the total 500 stocks have actually given negative returns. In some cases, the cuts have been quite significant. Now, coming to the Nifty Mid-Cap 100 index, now this particular index too hit its lifetime high level on September 12th. Since then, the index is down over 9% and over 80 out of the total 100 stocks have given negative returns here. The Nifty Small Cap Index, the next one that we're talking about, hit its lifetime high on October 18th. Remember, the Small Cap Index did see an extended rally. Now, in this particular index, the sell-off has been even more significant. Over 95 stocks have actually seen a negative return since October 18, and the index has corrected 8% in such a short span of time. Now, coming to individual stocks, especially when you're talking about the Nifty 500 index, quite a few stocks have actually corrected more than 25%. So the Nifty 500 index, you're looking at names like Delta Corp, over 28% fall, since September 12, names like NMDC, Navin Fluorine, Usha Martin, JBM Auto, all of these stocks have seen corrections of over 20%. Now, coming to the Nifty Mid-Cap 100 index, especially when we're talking about some of the names, in the railway space, IRFC has corrected over 19%. back of weak results, some negative news flow for Biocon. Both these stocks down 18%. CG Power has corrected 17%. IGL, so much negative news flow surrounding the EV policy. Stock has corrected 16%. And lastly, coming to the Nifty small cap index, the time frame has been very short. But despite that, some of the stocks have seen steep corrections. Triveni Turbine, HFCL, Data Patterns, MGL and Rights. All of these stocks have corrected well in excess of 10% each.
Okay, well, Vivek, thanks very much for that. That's a pretty interesting list of stocks there. The market on the Nifty is not really recovered, but as we've been pointing out, it's the small caps which have recovered the most. Like yesterday, the small cap index is down the least amongst the 4 indices. So it's down under 0.5%. And this is quite something. The low was made early on, actually. It was made at about 10 o'clock in the morning. And then, of course, the big jump started at about 1:30 or so. A little bit of come off in the last couple of minutes of trade, but not very much. Let's just look at the mid-cap part of the market as well. There is a recovery, but nothing like what we've seen with the small cap index. So, a lot going on. Shriram Finance numbers are at the bottom of the screen. Now, profits are up 13%. They come in at 1751 crores as compared to 1555 crores, same period last year, same quarter last year. We'll have Abhishek joining us with more details. NII up 18% at about 4934 crores coming through. We'll take a break here. We are back and there is more lined up on the other side.
Welcome back. Mayuresh Joshi is with us now on the show. Mayuresh, thank you very much for joining in. Wanted to get your thoughts in on Asian Paints. Reported numbers a while back, the stock has moved to the day's low, down close to about 3.5%. Just for the benefit of our viewers, Asian Paints reported a miss on the top line. The street was anticipating a 5% top line growth. The company reported flat revenue growth. And the problem is the volumes in the decorative business. Their mainstay came in at 6%, lower than street expectations of 7 to 8%, and the value growth was zero, which basically means despite a 6% volume growth, the value growth was flat, indicating that there may have been discounting or the product mix may have been a bit inferior. Margins, profits bang in line with street expectations. Mayuresh, what did you make of Asian Paints? Because it's been an underperformer, but does this further dampen the mood when it comes to Asian Paints?
Afternoon, Rima. Possibly, yes. I think two factors. One, as you rightly pointed out, the volume growth, which came in at 6%, tad bit lower than what the street was expecting at 8 to 9%. And therefore, the kind of expectation that one really had in terms of a reasonable volume growth coming through, aided by price as well. I think both these elements are probably missing at this juncture. Having said that, if you probably read the management commentary, erratic monsoons and lack of demand is something that they pointed out too, very, very categorically. How will Q3 and Q4 play out? Because Q3, Q4 will mean the beginning of a festive season. But what we have seen so far in terms of a lot of commentaries surrounding consumption as a theme, and some expectations that rural demand would come back very, very strongly in the second half, with deficient rains that have probably occurred throughout the country at this juncture, rural discretionary spending might be on a feeble note, which probably means that it might get pushed back in terms of discretionary spends as far as semi-urban and rural areas are concerned. So I think the management commentary, specifically their call, is going to be extremely important. But the volume number, which missed street expectation, and again, crude prices, which are largely a tad bit higher on a quarter-on-quarter basis, will put further pressures in terms of margins without the ability of the company to probably pass them through in lieu of weak demand. Valuations also are not cheap, even at this juncture for Asian Paints. So I think a reasonably soft set, along with soft commentary, is probably what is dampening the stock, and the underperformance might continue.
Okay, all right. Hi, Mayuresh. Good afternoon. I just want to clear it to our viewers, my co-anchors, as well as my, director, that we didn't go shopping together. It's just a coincidence that we have these checks on. But tell us, what about Suzlon? That's a stock that a few days ago, if you wanted to buy it, you couldn't buy it. It was going circuit to circuit. And prospects are good, but should you be getting in at 31? Have you missed the bus, or do you think there's further upside for someone who wants to invest, say, for the next few years?
So, Nigel, again, a clarification on my side as well. The two occasions that we won this shirt, and it was not intentional at all. 14th October, because I just saw on the chat, as I saw your shirt, that is when Nifty bottomed out at around 17,200 at that juncture. And around March when the Nifty bottomed out. So I think it's a good sign that we are wearing this shirt.
We'll take any good omen, Mayuresh. If you say that's a good omen, you want me, I can wear it tomorrow also. We'll see you on the show tomorrow. But tell us, what about Suzlon?
So coming back to Suzlon, yes, I think the kind of renewables and the entire intent that the government has in terms of push and wind energy in particular, Suzlon, Inox Wind have been big beneficiaries to a large extent. The tariff revisions that have probably happened are a good sign for these companies, because what probably transpired between 2017 and 22, 5 years before this financial year, I think the tariffs were muted, input costs were significantly higher, and therefore I think there was no way that wind energy companies were going to make any sort of money, and a lot of companies did shut down. But with a lot of orders expected to come their way, a lot of cleaning up on the balance sheet that has probably happened, and expectations in terms of the interstate transmissions and the tariff itself will probably mean better numbers as orders come in and execution happens from a balance sheet perspective. So I think things are looking up for both these energy stocks, Suzlon and Inox Wind. Anybody holding on can definitely hold on to this.
Okay. Gentlemen, maybe you're checking the right boxes, right? If I could carry on with that joke. Maybe checking the right boxes. Let's see if that good luck charm works again. Then I'm going to remember the date as well. By the way, it already seems to be working for the small cap market, Mayuresh. I'd have to say that. Let me just pull out some stocks. It seems like we're living in two different markets. Check out what's happened to Prestige Estates in the last couple of minutes. I mean, that stock surging 5.5%. Prashant mentioned Angel One earlier. It's also up about 5%. Sonata Software, yes, it had good numbers. Look at that move on Prestige. It's absolutely astounding. Sonata has now almost reached a 10% gain. There's Cera Sanitary Ware, which is up about 3.5%. Prism Johnson, 12%. The way I'm reading the Bector's Foods. I mean, today we had poor numbers from West Side. Look at Bector's Foods. 10% up on Bector's Foods right now. So it seems like I'm talking about two different markets, Mayuresh. There's a large cap Nifty sulking, nursing that 250-point drop. And I don't know what's quite happening in the small cap universe. Your sense?
Oh, absolutely. I think the maximum pain that was inflicted, Surabhi, in the last 4 to 5 sessions was in the mid cap and small caps. And that is where the maximum enthusiasm has been from a lot of HNIs, retail investors as well, trying to find the next multi-baggers. And it has done them justice because in the last 6 months, I think this index has touched all-time highs and given stupendous returns across spaces. But at this juncture, again, I think a large element on how markets are placed, how we are looking at markets at Markets with India. I think a lot of markets are seeing pressure both in terms of earnings. India, a little bit more unique in terms of both macros and micros. We are still holding out on most parameters. And therefore, I think the enthusiasm is coming back very, very strongly for the small cap and the mid cap universe, largely for the small cap. Even mid caps are probably down at this juncture as we speak. I think a lot of the index selling that might happen at the index level. And therefore, the enthusiasm might get drawn to small caps at this juncture. But I think we are in a wait and watch mode. I think we'll just like to wait and watch how the markets and what global events probably happen over the next few days before we start initiating some calls onto the broader markets.
Mayuresh, a few other names which have seen very strong recoveries, right? We were talking about BSC. JSW Energy has recovered some 9% from the day's low. Sonata Software, I think we had the management with us early on before markets opened. That's up 9% from the day's low. Sundaram Finance is up 8% from the day's low. Gujarat Fluorochem, some 8% from the day's low. So, there is a fair bit going on. Any of these strike a chord in your universe?
So JSW Energy, Prashant, looks very interesting because what is really transpiring in terms of the renewables, gaining a lot of traction in terms of their overall capacity is 9,900 megawatts. A large part of that component will also come in through renewables. And to a large extent, the kind of numbers that one really expects to come through. For the first half itself, the generation that they've probably done, both in terms of the thermal and the renewable assets, have been quite stupendous. Margins have held up pretty well. Net debt to equity around 1.4 times. So I think that's very, very reasonable in terms of the capex and the kind of committed capex that they've probably done, with very few capex or expectations of spending happening over the next few quarters, which means as numbers start flowing through, both in terms of the tariff revisions that we've probably seen and the overall leverage played on the balance sheet, I think cash flow improvement should be very, very obvious. So I think JSW Energy is somebody holding on, should hold on. Midcap IT is surprisingly holding out. A lot of companies have reported decent set of numbers, and therefore the expectations in terms of reasonable order wins coming their way, a large part of the wage hikes largely gestated by these companies as well. And with US data points holding up, the spending specifically in terms of both cloud computing, AI, data center spending would continue, which means this 1 to 10 billion kind of spends would largely continue having no pressures, apparently, at least as we speak right now, both in terms of pricing as far as decision making is concerned. So I think midcap IT and JSW Energy, probably out of the list that you mentioned, probably look a little bit more interesting.
Mayuresh, thank you very much for joining in. We're counting down, closing what's been a very tough session for our markets. 1.5% gone on the Nifty. The Nifty ending at the day's low, below 18,850, taking its 6-day cut to more than 1,000 points. Mid-caps ending in the red, but recovered, closed more than 1% from the day's low. And look at that small cap index. Finally, it's ending with a cut of just about 0.3%.
Yeah. The divergence got more and more stark in the last 1 hour. The Nifty is at the lowest point of the session. There's been absolutely no sight of recovery on the Nifty, but the small caps is where once again the flying around has started. Anyway, let me look at some of the Nifty stocks. M&M had a very weak session, 4% down on that one. Bajaj Finance lost close to 4% as well. Asian Paints, market not happy with the numbers at all, 3.5% over there. Nestle was the other one, Titan and Nestle, both from the consumer space. And not a great day for banks either. The Bank Nifty is down about 1.3%. Kotak Mahindra Bank would be one of the weak names over here. Even if I look at ICICI, down about 0.5%, HDFC Bank losing a little over 2%, and IndusInd ending flat. So relatively better off for IndusInd, but otherwise even SBI is down 1.5%. Reliance itself approaching numbers quite weak, 1.5% on the lower side. So that's the Nifty tally, and I think Axis Bank was the only outlier, which actually managed to put on about 2% by the time we closed out. But what a divergence, Prashant, on this.
You know, I keep saying it's the strongest, the small cap index is the strongest index in the world, and it is.
I mean, the way it bounced back today, the way these stocks are flying.
Yeah, no, I'm only half joking when I say it, because the other half is I'm absolutely serious, dead serious, because it's just been an incredible move. Although I'd like to point out that, you know, so I think the index on your screen is the Nifty small cap, which is made of small cap and cap, both made of 100 stocks. So there is a very clear double top on the small cap index. So we'll see if, this is a short-lived damage like what we saw after the 12th of September when the market, when the index sold off. I mean, actually the double top, the first top is the 12th of September. The second one is, of course, what we made earlier on the 18th. 18th of October, that is. So I think, but it's again lost the least amongst the four indices. So there is strength, there is buying interest coming through at lower levels. And we highlighted a lot of names where that interest really shone through today. Well, we'll slip into a quick break here. On the other side, our special offering, IPO KYC, comes up next.